The United States government just made a move that could change everything in the silver market. Over the past 72 hours, investors have been glued to their screens watching silver prices bounce around, wondering if the bull market is finally over. The volatility has been intense, but while the public was distracted by the dips, something far more significant was happening behind the scenes. The U.S. Mint, the very agency responsible for producing the nation's coinage, quietly made an internal update. And this update, it's not just about a price increase, this is a confession. Reports have confirmed that the U.S. Mint has now repriced its American Silver Eagles. The proof coins, they're now listed at $173, the uncirculated version, $169. But here's the catch. The spot price of silver on the market right now is only around $90. Let that sink in for a moment. $173 from the mint, but the market says $90. That's almost double. Now, some skeptics might say, but the mint is closed, sales are suspended, this price doesn't matter. Well, let me tell you, this matters more than anything else in the market right now. Why would the mint, an agency that isn't even selling coins right now, go in and nearly double the price of their silver coins? They're doing it because they're anticipating a massive shift. They know that when they finally reopen their sales window, whether it's next week or next month, they won't be able to sell silver at 90. If they did, they'd be practically giving it away. They'd be selling a strategic asset for pennies on the dollar. By pricing their coins at 173s, they're signaling that the true cost of silver, especially physical silver, is much higher than what the market is showing. The U.S. Mint has essentially admitted that the paper price of $90 is a fiction. It's an illusion, a derivative that has nothing to do with the actual cost of replacing physical silver. And that's where the problem lies. This disconnect between the paper price and the physical price creates a two-tiered market. The paper traders in New York dealing in digital contracts, and the physical buyers, the mint, the dealers, the industrial buyers who know the real price is far higher. And that, my friends, is what we call a broken market. Now, think about this for a second. If you're a retail investor looking at this situation, what's the first thing you do when you see the mint's price tag at 173? Are you going to sell your silver stack for 90? Absolutely not. You'd hold on tight. You'd start thinking, if the U.S. Mint is pricing silver at 173, my silver is worth way more than what the banks are offering. And that's exactly what's happening here. The government just told everyone holding silver to hold on for dear life. This isn't just some simple price adjustment. This is a message. The U.S. Mint, the very entity that prints the currency we use, is openly signaling that the true value of silver has far surpassed the paper price we're seeing on exchanges like COMEX. This kind of move by the Mint isn't random. They know the physical market is already in a state of crisis. They can't keep selling silver for $90 without eventually getting looted. And that's what they're avoiding. Now, here's where things get really interesting. This repricing didn't happen in a vacuum. It happened right after the banks failed to drive silver prices down during a massive price suppression attempt. They tried to push silver down to 86s, but the market refused to go lower. Instead, silver closed that week above 90, marking the first time in history silver stayed above that price at a weekly close. The Mint's price adjustment is no coincidence. The timing is everything. This is the U.S. Mint signaling that they've chosen a side. They've aligned with the inflationary forces, the forces that know the dollar's purchasing power is collapsing. And they've raised their price to reflect that reality, $173 for a single ounce of silver. This is a currency crisis unfolding in real time, and the Mint just gave us the clearest sign yet. But what does this mean for the bigger picture? Why is the silver market behaving like this in the first place? Here's where the story starts to escalate. Because while the U.S. Mint made that price adjustment, something else was unfolding that most people missed. A massive shift happened on the COMEX exchange, the very place where paper silver contracts are traded. On the same day, the Mint raised its prices. The commercial vaults at COMEX were being drained. And this wasn't a small move. We saw one of the largest single-day withdrawals in the history of the exchange. Over 4 million ounces of silver disappeared in just one trading session. But why is this so important? It's not just about the quantity of silver that was taken. It's about the underlying reason for it. When 4 million ounces vanish from the vaults in a single day, it's not retail investors buying up physical silver. No, this is something far more deliberate, a coordinated effort to pull metal out of the system. And this isn't a coincidence. The price was intentionally smashed to $86 just before this massive withdrawal. Why? To provide cover. The banks needed to drop the price to $86 so they could scoop up the physical silver at a steep discount. And the most terrifying part of all of this, it worked. They got away with it. They looted the vaults at a price that doesn't reflect the reality of silver's true value. This is the exact moment when the system begins to crack, when the paper price and the physical reality diverge so drastically that something has to give. This wasn't just a price drop, it was a heist, a well-executed raid on the silver supply. And the implications of this go far beyond a simple market correction. This is a direct attack on the liquidity of the entire silver market. And when liquidity starts to dry up like this, the banks are in a world of trouble. The gap between the paper price and the physical price grows, and that's when the system becomes unsustainable. Now we're about to dive into something even more disturbing. What we saw with that 4 million ounce withdrawal from COMEX isn't just a one-time event, it's a signal. And the real question is, who's behind it? The banks. The same banks that are caught in a massive short position on silver, estimated at a staggering 4.4 billion ounces. Let that number sink in for a moment. The global mining industry only produces around 800 million ounces of silver a year. These banks are holding paper contracts for more than 5 times the entire annual production. And they're short. This is the definition of a naked short. But here's where the contradiction gets impossible to ignore. These banks are pretending to have silver they don't own. They've sold contracts for silver they can't deliver. And now, as the vaults are drained and the real silver disappears, they're in deep trouble. They've been playing a game of illusion, selling silver that doesn't exist while pretending that the paper price reflects the real world. But as the physical metal keeps vanishing, the truth becomes harder to hide. And when the physical supply starts evaporating like this, it's not just a short squeeze waiting to happen, it's a collapse. The banks are trying to suppress the price to avoid catastrophe, but they're only digging themselves deeper. And that's when the retail investors who've been quietly accumulating silver in ETFs like SLV are going to realize they've been holding on to nothing more than a receipt for a stolen car. They think they own silver, but they don't. What they're holding is a claim backed by nothing but paper. Here's the kicker. The same banks controlling the silver ETF system are the ones holding these massive short positions. This creates a massive conflict of interest. These banks don't just control the supply, they're manipulating the very system that retail investors are relying on. And with the physical silver running out, it's only a matter of time before this house of cards comes crashing down. The banks are trapped, and when the squeeze finally hits, it will likely wipe them out. Now, let's zoom out and look at the real-world impact of all this. You, the retail investor, are caught in the middle of a war that's playing out in plain sight. And it's not just about silver. It's about what this all means for you and for everyday people trying to protect their wealth. You see, the banks are maneuvering, draining the vaults and manipulating the price of silver, but you're just trying to safeguard your future. And that's where things get personal. If you've been following the silver market, you know it's been a haven for people looking for a safe store of value. It's been a place where ordinary people could turn to escape the chaos of fiat currencies and unstable stock markets. But now, this crisis isn't just for the big players, it's hitting the retail investor where it hurts. You've been buying silver, trying to secure your financial future, but what if you've been buying the wrong thing? What if that ETF you've been accumulating is nothing more than a mirage? If this feels familiar, if this feels like something you've seen before, let us know in the comments. Because this moment isn't just an isolated incident. It's part of a larger pattern that will shape the financial world for years to come. The banks are cornered, the mint has tipped its hand, and you're caught in the middle of it all. So what does this mean for the everyday person? How does this play out in the real world? Well, for starters, it means that the game is rigged. The banks are playing by a different set of rules, and you're stuck trying to figure out how to navigate a system that seems designed to work against you. But here's the thing, this isn't the end game. Far from it. This is just the beginning. Now let's step beyond the chaos and start unpacking what's really going on behind the scenes. This is where things get unsettling. What we're witnessing isn't just a series of isolated moves by banks or the mint. It's a systemic issue, a mechanism that's been in place for decades, quietly shaping the financial system, and now it's all coming to a head. So what allows this to happen? How does a situation like this, where a massive disconnect exists between the paper price and the physical price of silver, continue to unfold? It's all about leverage, incentives, and control. The system is designed to keep the public in the dark, to keep the flow of money concentrated in the hands of the few. The banks don't just control the paper market, they control the narrative. They can manipulate prices, drain vaults, and shift assets around while the rest of the world watches in confusion. But here's the real insight that most people miss. This isn't just a market crisis, it's a crisis of power. The banks, the mint, the government, they all play a role in maintaining the illusion that silver is worth $90 when we know it's worth much more. Why? Because a sudden repricing would expose the true fragility of the entire system. If silver were priced at its actual value, the dollar would face an existential crisis. The inflationary pressures would be too much for the economy to bear. And so the system tries to keep things normal, even as the truth is being siphoned off into private hands. What we're seeing is a market that's been distorted by years of manipulation, an entire financial structure that thrives on the illusion of value. And now, as that illusion begins to crumble, the consequences are starting to show. The system that's been suppressing the price of real money is coming apart at the seams. And when it does, the consequences won't just be financial, they'll be societal. The situation has reached a tipping point, and now we're staring at two very different paths forward. On one hand, you have the possibility that the paper price of silver will eventually catch up with the physical reality. The mint has already tipped its hand by pricing silver at 173. The market is being drained of physical metal at an alarming rate. And the retail swarm, well, they're buying silver at a pace that's never been seen before. If this momentum continues, it won't be long before the paper price is forced to reflect the true cost of silver. But here's the other possibility. The system fights back. The banks have a lot of power, and they might not give up their control without a massive struggle. They could continue manipulating the price, attempting to suppress it long enough to cover their positions. But the question remains, for how long? How long can the banks continue to print paper silver when the real metal is disappearing? Here's the key thing to watch the next few weeks. The physical supply is vanishing. The banks are desperately trying to cover their short positions. But as more and more metal leaves the system, the risk of a complete collapse grows. When the retail buying pressure hits critical mass, it's going to force the price of silver to explode upwards. And that could be the moment when the entire financial system is forced to face the truth. This is the part that's still uncertain. The banks are trapped and the retail swarm is relentless. But the question is, which force will win out? Will the paper price eventually reflect the physical price, or will the banks manage to hold it down long enough to survive? The next few weeks will determine the outcome, but one thing is for sure. When silver's true value is finally revealed, it's going to be a shockwave that changes everything. Here we are, standing on the edge of a financial revolution. The U.S. Mint has already signaled what they believe silver is worth, 173. The vaults at COMEX are being drained at a pace never seen before. And the retail investors, they're locked into a buying frenzy, grabbing up silver as if they can feel something big is coming. This isn't just about silver anymore. It's about the entire financial system. It's about the banks, the mint, and the people who are trying to protect their wealth in an economy that's built on smoke and mirrors. The reality is the banks are running out of options. They've trapped themselves in a 4.4 billion ounce short position that could devastate them if silver continues to rise. They've used every trick in the book to suppress the price, but the reality of the situation is becoming undeniable. The physical silver is disappearing and the paper price can't last forever. So where does that leave us? In the short term, expect volatility, expect price swings. The banks are still trying to suppress the price, but they're on borrowed time. The spread between the paper price and the physical price is the clearest indicator of how fragile this system really is. As long as that gap exists, the bull market is still intact. The squeeze is still active. And when that gap finally closes, when the paper price finally catches up with the physical price, we're going to witness one of the greatest wealth transfers in history. So what's the strategy? Simple. Don't sell your physical silver. Don't be fooled by the volatility. The paper price is a game. The real game is in the vaults, and those vaults are emptying fast. Hold onto your silver until the paper price catches up and keep watching the spread. As long as it's wide, the squeeze is still on. This is it. The great repricing is underway. The banks have lost control of the physical market. The public is waking up. And when the dust settles, the price of silver will no longer be determined by the paper market. It will be determined by the true value of the metal itself. And when that happens, everything will change. If you found this analysis valuable, don't forget to like, comment, and subscribe for more insight into the biggest financial shifts of our time. We're just getting started.